Good morning. Forgot my cough on the other side of the room. I need that cough. So last time we met, what we discussed was um, accounting, understanding what the systems were, what their purposes were. If I'm not mistaken, we talked about liabilities, equity, assets, what they are. Talked about the difference between a service business and a merchandising business. And we were just getting a general understanding of what accounting is indeed supposed to be, right? So we got to the point where we were starting to learn more about how the accounting equation works. And if you don't remember that, the accounting equation is the one that looks like this: assets equals liabilities plus stockholders' equity. Okay. So we talked about that. We discussed what an asset was, owned company resources, which have a dollar value. Then we went forward to show examples. We talked about liabilities, any money owed by a company, and then equity, which could be said in two ways: either stockholders' equity or owners' equity, which is the money that the owners themselves has put into the business. So money that's in the business that's not owed to anyone else, as it already has an owner. Okay. Now, after we learned all these terms, we then learned a math equation. Accounting is about numbers, but not necessarily math. And in this case, our math equation is as follows: assets, what we own, is equal to what we owe or what we earned. Okay? Assets, things we own, are equal to what we owe, I borrowed it, or what we earned, I made it. Okay? Now you have two terms here: debits and credits. Debits simply mean the left side of the accounting equation. Credits simply mean the right side of the equation. Okay? Debits, left; credits, right. Okay? One way I used to remember that is credits got an R in it. Debits don't. R for right. Neither one of them got an L. Only one of them got an R. Right. Credit. Credits go on the right side. Okay? Now, we're introducing a new concept called the chart of accounts. The chart of accounts is a listing of the names of accounts a company has identified and made available for recording transactions. Okay? These accounts are tailored to suit that company's needs. As we talked about earlier, we mentioned in the last video cash. A cash account will record all cash transactions. An inventory account will record all inventory transactions. So what are we saying? Things are going to be categorized based on the needs of the company. Okay, see if they give us an example. Not yet. They're letting us know that how big the accounts are reflect the size of the business. If I had a business, my chart of accounts might just be cash, accounts payable, accounts receivable, inventory. If McDonald's had one, they would have to account for every business, the money they owe, the coupon values, the cups, and this, because they got more things than me, thus making their chart of accounts larger. Okay. Now, chart of accounts are typically listed in the following order. Okay. First, you have balance sheet accounts: assets, liabilities, owner, equity. Our big three. The big three. But then they also go into income statement accounts: operating revenue, operating expenses, non-operating revenue and gains, non-operating expenses and losses. Now, this is a chance to speak on two vocabulary terms, okay? Operating revenue and operating expenses can be organized by business function, selling and financing, and or company division, product lines, depending on the company. So when I said that this particular situation with McDonald's being bigger, they have more locations. So their revenue may go from just operating revenue, meaning money received from standard operations, to different businesses. So it could be broken down further. Okay. operating, the price that it costs you to do business. So if you have an operating expense, it's the expenses incurred, the cost incurred for doing business. If you have operating revenue, it's money you receive from doing business. Then we insert the prefix non. So non-operating doesn't have anything to do with the business. Non-operating expenses doesn't have any. See what I'm saying? It's not in your direct line of what you do. It costs you money or it made you money, but it's not your direct line of doing. Okay? These accounts are assigned numbers, but, and they are within the main asset. So if it's an asset, assets are 100, then 101, 102, 103, 104, 105 will all be different types of assets. Slow down. 100, my big category, cash. No, big category, assets. And I have different types of assets that I'm going to record stuff for. So 100, assets. 101, cash. 102, accounts receivable, right? Then my 200 series, my liabilities. So remember, we got assets, liabilities, and owner's equity. So 100 is assets, then we break it down. 101, 102, 103. Then we got liabilities, 200, we break it down. 101, 103. Okay? Now, accounting software frequently includes sample charts of accounts for various types of business. Companies can expand or modify. An accounting software is something that you mostly plug your information into a system and it organizes things methodically based on things that are normal or usual. So based on typical things, it conducts itself. Okay. And you can add to it or take from it, because at the end of the day, your accounts are customized to your needs as long as they fit the systematic usage. Remember our original accounting definition. The process of keeping financial accounts is the systematic recording. Systematic recording. Okay. So that's where some of these things that seem very nuanced, that's where they come into play, because we're dealing with creating a systematic sense of recording. Systematic recording. Okay. It's a system, it's something set in stone, it's a certain way we should do it. All right. Now, revenue. Revenue is earnings for work completed or goods delivered. Earnings for work completed or goods delivered. Okay. This could include service revenue, meaning I received the money for doing the service, cutting grass, cutting hair. Interest revenue, meaning I have my money in a bank account or I invested in stocks and I receive money back for having my money and letting them borrow it. Rent revenue, I own a building, someone is renting space from me. I own a barbershop, someone is renting a chair. Okay. Revenue increases owner's equity, even if the money isn't received immediately. Okay. When you're dealing with business, they have a sense of you're going to pay, right? Because I could sue you and get my money because you owe me. So once we do contractual work, you owe me, I can count on that. It may not be liquid, but I can count on that. So even if the money I receive right away, meaning like I borrow my credit card, I'm going to give them the money eventually. I just ain't got it yet, right? When you get a credit card with Sam's, you swipe it, Sam say you're going to pay their money back later, okay? So it still increases what they're worth because you owe them money. They can count on you paying them, allegedly. Okay, so revenue, earnings for work completed. Okay. Expenses. Expenses are payments made to help the company earn revenue. Emphasis on that. Everything that they buy is not an expense. Okay, it has to be used to help the company earn revenue. The money must be spent to earn revenue. You can't go take the company card, buy yourself lunch, and try to say it's an expense. No, you just spend money on lunch. It's not a business expense, right? But if I take the company card and I go buy lumber because we build houses, we need lumber to build a house. Expense, okay? Expenses used are things like utilities, right? You got to have the lights on. Supplies, you got to have the lumber. Rent, you got to have the building. Salary, you got to pay the people. And they all decrease owner's equity. Decrease owner's equity. The amount that you've earned is decreased by the amount you had to spend to earn it. Okay? Now, tips. Quick tips. Expense accounts are debited and have debit balances. It means that their balance is typically on the left side, right? Because debit means left. Expense accounts are debited and have debit balances used on the left side. I use the left side as positive, but it depends. What we're saying is debits is on the left side. Revenue accounts are credited and have a credit balance, so it's going to be on the right side. Asset accounts are normally debit and have asset accounts normally have debit balances. What they're telling you is this is bending the rules. And these are rules we're going to go into a little later that can be slightly confusing. But for the most part, assets are, we're going to talk about debit and credit normal. I may insert a YouTube video to get you kind of brushed up on it. But what we're going to be learning is what side to put certain things on. Okay, we'll see if they talk about T accounts in it soon. Nah, so we're going to come back to this next time. Matter of fact, right after I finish talking with this, I'm going to put a brief YouTube clip at the end. You don't have to fully understand it now, but listen to it, because when we go into it, it's one of the things it gave me problems when I first started. And it was not until an adult it was made easier. So I'm put the clip on now. Take your time. Remember, let me check what we're doing on ICV, because we are indeed on ICV. And what we want to make sure we're doing is the right work. So let's go ICV. Log in. Let me see all that. All right, because I want to make sure that everybody know what work we're supposed to be doing. I don't want y'all behind. I don't need y'all behind. I think we've been doing pretty good so far. So things I know that we want to do. Okay. Career connections. Should have did that already, hopefully. Career connections will be graded at your service A and B. I remember assigning those. Make sure you do both of those. That's 3 things. Left, right, we'll be getting into that next. To owner, to O, we'll be getting into that next. Student notes should be completed. And vocabulary should be completed. So right now we should have 1, 2, 3, 4, 5. We should have 5 assignments plus that first ed puzzle. So we have 6 assignments. With the ed puzzle being a major. And I'm undecided what will be the major on this. So make sure you complete all of them. I'm going to decide pretty soon. Okay. That concludes our recording for the day. Make sure you get started on that work. At the end of the day, those assignments I said I'm expecting, I almost expect them to have already been done. Make sure you put your screenshots on them. If your screenshot's not on there, it will not be graded. It's on the board. If you do not submit the screenshots of the assignments and submit them in the proper location, you won't get a grade. Okay. I don't want any more miscommunication about if you turn something in and when. So everything must be submitted on Schoology. Screenshot with the grade on it to the Schoology. All right. Thank you so much. All right. Appreciate it. Y'all have a great rest.